Figured I would say a little bit about range charts as well, kind of as the preliminary knowledge, the background going into, what makes the system click and how I use it. I went over how to set them up in the TradingView video. Um, Pretty much all you have to do is get the premium subscription or whatever that allows you to do them, and then you select range from your setting and you can set the size. In the earlier videos, I didn't have the 128 size as a favorite up here. But I've added it. I think it's useful, probably one that I want to look at a little bit more personally, but also useful from a teaching perspective. And again, the way a range chart is built, it's not based on time, it's based on price movement. So if we set it for 8 ranges, that's 8 ticks, which is $2 on the ES contract. So a candle will print every time there's a range of a $2 price movement from the candle before it. So $2 of price movement happens, we get a candle that prints, and then whenever price moves over a range of another $2 from there, another candle can print. And this can be, an 8 tick or $2 range that doesn't overlap with the candle that just printed it all, or it can almost completely overlap. Um, there's nothing based on how the previous candle went that influences how the current candle goes. Just a candle prints, and then we're in a new candle. And once 8 ticks of distance, either up or down, or some mixture of the two, has been covered, a new candle prints. So the 8 range setting represents a pretty low zoomed in time frame, and then as we get up all the way to 128, that's a pretty zoomed out macro view over like weeks or months up at this stage. Reasons why I use a range chart compared to a traditional candlestick chart is kind of similar to the difference between the Awesome Oscillator and stochastic indicators, where the AO just filters out a lot of noise and really brings a lot of clean, like visual cleanness and simplicity to what we're looking at and what we're doing. Moving from a time-based to price-based charting does that as well. If we pull up this high time frame chart and zoom out a little, I think it's very easy at a glance to understand what price has been doing recently pretty well. You can see we were kind of capped around this area and then flipped this resistance into support. So this area has been acting like support. We've gotten a few touches off of it. Getting another touch here and then coming up if there's something that's supported by the momentum indicators would probably indicate a good long. And if we break down and then retest it and get some kind of short signal, that would probably be a good short. We can see there's maybe another zoom or another area through here. This seems to be an area that price is respecting or pretty key. If we got above this and stayed above this well and got some long signals, that would probably be a good long. It's very easy at a glance. One glance, we can identify a couple key areas and then zoom in some more and try and start hunting for trades. Very clean, not a lot of noise. It cuts down on the signals that we get on the stochastics and the AO as well. And it also makes the risk and profit parameters easy because our candles are based around a set price move. Like we always know what the distance represented by one candle is, which in this setting at the 64 range is 64 ticks. So if we wanted to enter a short, and we use our trading tool here to visualize it, Um, for the 64 tick setting, I use a stop of 80 because that covers, we know anytime that we take that, this will cover the candle previous to when the trade was taken and also just give a little bit of wiggle room. For my system, I use a 3 reward to risk setting. So it'll be 80 on the for the stop and then 240 for the profit taking. And because we use the range setting, we know that just these settings are going to be the same anytime I take a trade based on this. time frame and range setting. So, a lot of the work is done. I don't need to worry about where I'm putting a stop because I always know the distance and I always know, well, like what a good baseline profit setting point is. In this example, we have a key area, so if we're getting a short here, it's probably a safe bet we're going to hit the key area. So could move it a little bit and, extract a little bit more value and customize a little bit more. But you can see that the baseline of entering a trade is like very easy and very straightforward using the range chart. I'm not going to cover other chart styles, uh, at least not very much at all in this course. Maybe at the end I'll talk about just regular candlesticks and how you can use those if you want, because you can do some trading based off of these, especially on higher time frames like the 3-day or the daily. But in case you're interested and want to look into it more, Renko charts are another range-based chart setting that I've used before and find pretty useful. And you could use a pretty similar trading style with them. Uh, just not going to talk about it too much for the sake of simplicity. But it's another chart setting where price movement is what matters and time more or less is not a factor. We're just looking at what range price has been in. And it can, take any time, any amount of time that goes into that price range will be represented visually in the same way. Another non-time-based charting system that I like a lot is point and figure. In point and figure, it's just represented by straight up and down, like piles of boxes on top of each other. And you have down and up rotations that are just represented by lines of boxes. Something you can look into some more on your own if you're interested, but I won't go into too much. I have traded using both Renko chart set systems and point and figure before. Brian Watt, who is still around a little bit, but has been quite a trading guru in his time, is a huge fan of. He uses Renko some, but point and figure especially, he calls the king of all charts. But just an interesting thing to bring up. Don't get too lost in the weeds based on, this course. We'll just be focusing on the range charts themselves. Hopefully that explains it pretty well. I'm going to wrap stuff up there.